Real estate investment trusts, typically known as REITs, are companies that own, manage, and operate income-generating real estate assets, such as office buildings, shopping centers, apartments, hotels, and warehouses. REITs allow individual investors to invest in large-scale commercial real estate properties without having to purchase or manage the properties themselves. They operate similarly to mutual funds or exchange-traded funds. But instead of investing in stocks or bonds, they invest in real estate properties. In this video, we'll explore real estate investment trusts or REITs, the advantages of REITs as a real estate investment strategy, the disadvantages that come with investing in REITs, and the important factors to know before investing in REITs. By the end of this video, you will have a better understanding of the pros and cons of real estate investment trusts. If you are ready, let's start with an overview of real estate investment trusts or REITs. And later in this video, we will examine their advantages and disadvantages. Real estate investment trusts or REITs are companies that own or finance income-producing real estate properties. They operate similar to mutual funds or exchange-traded funds, except instead of investing in stocks or bonds, they invest in real estate properties. REITs allow individual investors to invest in large-scale commercial real estate properties such as apartment complexes, office buildings, shopping centers, and hotels. They offer investors the opportunity to diversify their portfolio and earn income from real estate without actually having to purchase and manage the properties themselves. In order to qualify as a REIT, the company must meet certain requirements set forth by the Internal Revenue Service (IRS). For example, they must invest at least 75% of their assets in real estate, derive at least 75% of their gross income from real estate sources, and distribute at least 90% of their taxable income to shareholders as dividends. So, how exactly did real estate investment trusts come to existence? And what's the history behind them? Well, real estate investment trusts or REITs were created by the U.S. Congress in 1960 as a way to provide average investors with an opportunity to invest in large-scale income-generating real estate properties. The idea behind REITs was to give individual investors the same benefits of investing in real estate that were previously only available to large institutions or wealthy individuals. The legislation that created REITs, called the Cigar Excise Tax Extension of 1960, allowed companies to avoid corporate taxes if they met certain requirements, such as investing at least 75% of their assets in real estate and distributing at least 90% of their taxable income to shareholders as dividends. The first REIT was launched in 1961 by the National Association of Real Estate Investment Trusts, NAREIT, a trade association that represents the REIT industry. The first REIT, which was called the First Mortgage Investors, was created by a group of investors who wanted to invest in real estate but didn't want to own and manage properties themselves. Since then, the REIT industry has grown significantly, with hundreds of publicly traded REITs and many more private REITs. REITs have become a popular way for investors to gain exposure to real estate, and they offer a range of benefits such as regular income, diversification, and potential long-term capital appreciation. In 1986, Congress passed the Tax Reform Act, which made significant changes to the tax treatment of REITs. Under the new rules, REITs were required to meet even stricter requirements in order to qualify for tax advantages. But the changes also made it easier for REITs to raise capital and expand their operations. Today, REITs are a well-established investment vehicle, with a wide range of properties and investment strategies available to investors. They are subject to regulation by the Securities and Exchange Commission (SEC) and are required to disclose financial information and other important details to investors. You may ask, how to invest in publicly traded REITs? Well, you can buy shares of a publicly traded REIT on a stock exchange, similar to buying shares of stock in any other company. And publicly traded REITs has a share price per unit of investment. So if you have a brokerage account, you can simply buy these shares directly online, just like you buy a share or multiple shares of publicly traded companies, such as Ford, Microsoft, or Apple. REITs can offer a range of benefits, such as regular dividends, long-term capital appreciation, and diversification. However, they also come with risks, such as fluctuations in the real estate market, interest rates, and tenant vacancies. As with any investment, you must carefully research and consider the risks and potential rewards before investing in REITs. Now, let's explore the pros of investing in real estate investment trusts. The first potential advantage for investors is diversification. REITs provide investors with diversification, as they invest in a variety of properties across different sectors, such as office buildings, apartments, shopping centers, and hotels. This can help reduce risk and increase potential returns by spreading investment across different property types and locations. The second advantage is regular income. REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends. This can provide investors with regular income, which can be particularly attractive for those looking for steady cash flow. The third advantage is potential for capital appreciation. In addition to regular income, REITs offer the potential for long-term capital appreciation. As the value of the properties held by the REITs increases over time, the value of the shares can also appreciate. And finally, the fourth advantage is professional management. REITs are managed by professional real estate managers who have the expertise and resources to operate and maintain properties effectively. This can be particularly beneficial for investors who do not have the time, knowledge, or resources to manage properties themselves. Now that we talked about the pros, let's explore the cons of investing in real estate investment trusts. The top one that comes to mind is market fluctuations. REITs are subject to fluctuations in the real estate market, which can impact their performance. Economic downturns, changes in interest rates, and tenant vacancies can all affect the income and value of the properties held by the REIT, and in turn, the value of the REIT's shares. The second disadvantage is interest rate sensitivity. REITs are often sensitive to changes in interest rates. When interest rates rise, the cost of borrowing increases, which can reduce the profitability of the properties held by the REIT and decrease the value of the REIT shares. The third disadvantage is lack of control. As a shareholder of a REIT, investors do not have direct control over the management of the properties held by the REIT. This can be a disadvantage for investors who prefer to have a more hands-on approach to managing their investments. And the fourth and last main potential disadvantage is fees and expenses. REITs can be subject to fees and expenses such as management fees, operating expenses, and transaction costs. These fees can reduce the returns that investors receive from their investments. We explored the pros and cons of investing in REITs. Overall, REITs can be a valuable addition to your investment portfolio if you are looking for diversification, regular income, and potential long-term capital appreciation. However, as with any investment, it's important to carefully consider the risks and potential rewards before investing in REITs. You should also research and compare different REITs to find the ones that best meet their investment goals and risk tolerance. Let's summarize what you learned in this video. In this video, you learned about real estate investment trusts, or REITs, the advantages of REITs as a real estate investment strategy, the disadvantages that come with investing in REITs, and the important factors to know before investing in REITs. Thanks for watching.